welcome everyone to Bluejay's Twitter Spaces. We do this on a weekly basis where we bring on protocols from different protocol founders to share with us what they are doing. And we've been focusing a bit more on the real world asset lending space. In this case, today we'll be having real estate tokenization. And today we have Domingo from Homebase DAO. And thank you for the opportunity for us to speak with you today. And let's get it started. Morning, it's morning, Domingo. Actually, it's evening here, but kindly introduce yourself and briefly on what Homebase DAO does.
Yeah, absolutely. No, thanks so much for having me. It's 7 a.m. for me right now, so we're in different sizes of the planet right now, but lovely to be connected over Twitter. So happy to share a bit about me. Originally from South Texas, I was born to immigrant parents who came from Mexico, moved to the US. For them, real estate was a big piece of achieving financial freedom for them. It was like a classic way of building passive wealth. And so that was instilled to me as a kid. Ended up going to Penn, studied finance and real estate there. Thought I was going to do real estate banking. Instead went to Google, was at Google for about 5 years, did product strategy and operations for most of my time there, but bought my first multifamily property about 3 years ago. In that time frame, just that experience was pretty awful. So many third parties, had to get a bank involved, took 3 months to actually closing the home. And so that's really where I started ideating in the space of what could be done to make this easier and faster for people to invest in real estate. And also coming to the realization of just how unaffordable it's gotten. I think the average income in the US is around $35,000 and the average home in the US is around $430,000. So there's quite a gap. And so at Homebase, it's all about just how can we make real estate affordable for people? And tokenization and Web3 was an amazing way to add transparency and speed into that flow. So happy to dive into any pieces there, but that's a bit about myself and how I ended up in this space.
Yeah, that's a great way to, great segue, especially with, similarly in Asia, your first house is basically your, most of your money already. Majority of your net worth. It's quite important for us as well to achieve our first real estate. It's tokenization. Digital tokenization is one of the ways to go about doing so. Homebase DAO definitely is working on that. But maybe you can get into also briefly about how do you meet your co-founders and how did you guys get together to come up with the idea of Homebase DAO?
Yeah. So actually wrote a white paper like way back in the day, like maybe early 2021, just about what if people had the ability to invest in real estate by coming together as a collective completely online. And we wanted to do that as a true DAO, but realized starting off as a DAO is really inefficient. And then we also realized that like the true mission we were going after was really just giving more people access to real estate. So then we really pivoted at the time, Homebase DAO, kept the name, but then we said, okay, what if we just fractionalize real estate and make it really easy for people to invest directly on the platform? So that's like where we started. But in terms of how I met my co-founders, we're a team of 3 right now. So my first co-founder, Alex, he's our COO. Met him through his girlfriend that used to actually work with me at Google. And so we just both really connected on real estate. He also has a rental property. Grew up in San Francisco, so he quickly saw how unaffordable it's gotten. So feels priced out of the area he was in, really aligned with what we were building at Homebase. And so he was my first co-founder. That ended up meeting my second co-founder, Basil, who's our CTO. Actually, in this company called BuildSpace, they're like a Web3 community that teaches people how to build Rust, how to code on Solidity. And he's very knowledgeable on the web, in like the actual building of blockchain related software. And so he ended up joining the team about a year ago now. So it's been the 3 of us working on this full time for almost a year.
Nice. And just the 3 of you are working on this at the moment.
Yes, just the 3 of us.
Oh, that's crazy. And congratulations on the first sale, like full sale of the house. But yeah, if you don't mind getting into how product itself, so like how does Homebase DAO simplify the process of investing in real estate for retail investors in crypto? And yeah, if you don't mind to also like other than that, maybe segue into how does that compare to say traditional methods of investing in real estate and what are the benefits?
Yeah. So for us, it's all about how can we truly make the experience very seamless for end retail investors. And so for the very first home, there was a bit of hiccups along the way because it was a very first MVP. So I think the transaction process when it first came out, how it was having some difficulties. We minted everything out as NFTs. So if you try minting out too many at once, the block time would take too long and it just wasn't working. But the goal of what we're doing at Homebase is to make it where with just a few clicks and after KYC, after like we need to know who you are, like your identity and whether or not you're a accredited investor. But the goal is to make it where you can invest in homes with as little as $100 in like a few clicks. And once you buy those tokens, you now have them in your, like your Solana wallet. And, you know, you can do what you like with them. Yeah. Like the goal is just to make it very simple and easy for people. I think how it compares to traditional real estate. So the returns that we're getting are, we look for good deals in the market and we try to source good properties. So for this first home, I think we got a good deal. We waived all fees. Of course, we as a platform are going to be charging fees. We plan to charge a 4% fee on any home listed and sold on the platform. And then for any sort of secondary trading, we plan to charge 2%. So of course the IRR there makes it a little bit less than if you did it yourself. But if you did it yourself, it would also take you months to close. You have to work with a ton of third parties, with a ton of friction, and the barrier of entry is much higher. So for us, it's like we charge a fee for that. We really want to make it where for an end user, you just connect your wallet, you buy your tokens, you wait, you collect your rent every month, and then you can sell when you're ready.
Yeah, that's great. And yeah, that's definitely a lot simpler than, I guess, typical traditional real estate investment. Yeah, other than that, I guess if you can also get into how the tokenization comes about. Is it in the form of tokens or is it like non-fungible tokens, the denomination? Yeah.
Yeah, of course. So we live in a very much Web 2.5 model right now, in which there's a lot of regulation in the US. So for this very first home, it was only eligible to US investors. And for the near term, will likely just be available for US investors. But like for this to truly get traction and grow, we want to open this up to everyone. But every single country, as you can imagine, has its own legal jurisdiction on how this works. And so we've been trying to work very closely on the regulatory side to make sure everything we're doing is standardized and nothing's illegal and anyone double clicked on us or it's nothing. Like we want to protect our end users at all costs. And so if you have like really gray legal area, it's not always the best for end users. So we tried being very clear on that. But in terms of how the tokenization works, we use this standard called security token offerings. And so what that does is we use non-fungible tokens as the means of representing that. So we issue them. That's just like your normal NFT with a few different applications. So the first is we can null NFTs and then reissue them. So the thing there is if someone gets hacked and they get their NFT stolen, they let us know. We then null the old ones, we reissue new ones and the owner's protected. That's really the biggest one. And the second piece is we whitelist every wallet. So we know exactly who owns what tokens at what time. And that's another piece because these are securities and we file these as Reg D 506B securities. They're private placement offerings. So we let the SEC know that we did this and we just have to follow certain regulation, like knowing who everyone is. But that's just how the tokens interact. And on the Web 2 side of it, there is like an LLC operating agreement that manages the legal entity holding the property. So to walk you through the end-to-end flow, we as Homebase find a home we like. We reach out to the owner and we tell them, hey, we'd like to purchase this property. We then sign a buyer-seller agreement with them, or we have exclusive rights to sell the home on their behalf. We then spin up a special purpose vehicle. And that's just really a legal entity that we create to acquire that home. And we tokenize that a special purpose vehicle. And so we effectively split that up into a lot of different shares. And like each of those shares are represented via non-fungible tokens. So that's what people are acquiring when we first list a home for sale. And then once we raise the necessary funds, the transaction then goes through. So we transfer all the USDC we raise in that sale into US dollar. And then we actually buy it directly from the homeowner in US dollar. And then they transfer the home into that legal entity. And then every single person who has these tokens now is a fractional owner of that property. And so then we as Homebase begin to manage the home, collect rents and distribute them. But yeah, that's just how the tokenization plays into it. It's not completely Web3, but it's because of where we are legally. We're building all the infrastructure to allow for this Web3 future world where there can be composability, where people have a lot more ownership over their tokens. But we're slowly getting there as regulation loosens up.
Yeah, I mean, it's actually seems quite straightforward actually from what you explained. Yeah, but other than that, like curious, yeah, when you say whitelisted wallets, because of the legal issues around it, because it's credit token, there's a need for KYC of each wallet. And yeah, just curious about that bit.
Yeah, that's exactly correct. So anyone who comes on our website, because we are using a Reg D 506B, we're limited to 35 non-accredited investors per home. And each of those non-accredited investors, we have to have an established relationship with. So we actually have a call with one of our co-founders. So everyone who onboards actually wants to invest in a home has scheduled a call with him. I think he's had 100 calls in the last week of people that want to participate in the next home. But it's a great way to also like ask us questions. Okay, what type of homes are you offering? How does this work? And then it's a great way for him to understand what do our users want? What type of properties are you looking to see? What features do you wish you had? But yes, we also KYC everyone in that process, and we know exactly whose wallet's tied to whose name.
Oh, okay. Yeah, that's that's quite a one-to-one process. But yeah, for your KYC, do you guys store that off chain, or do you guys have another provider that handles that bit, or is it stored by you guys? Just curious. Because let's say for Goldfinch Finance, which is a real asset lending protocol, they have this off-chain feature where another company handles that bit, and they mint an NFT that tags the wallet to the off-chain data. But yeah, just curious how Homebase handles the KYC process.
Yeah, so we use this company called Persona, and they do all the KYCing for us. They do the AML checks for us. So we don't handle the data directly, and we don't store that data, but we can see all the data based on their checks.
Okay. Yeah. Understood. And yeah, I guess next question I have is with regards to the rental income. So how is that dispersed to each individual? Does it come in USDC? Yeah. Yeah. How does that work?
Yeah, so we have everyone's wallet address. And so we know exactly who participated in this first home. So we collect the rent in USD. We're actually partnered with Circle. So we basically upload the US dollar into our Circle account. We convert it into USDC, and then we start to distribute it to every single wallet, whatever the proportional amount is. And we do that monthly.
Monthly. Wow. Okay. That's
Yes.
nice.
Yeah. Well, so what we do is we basically have projections of how we think every property is going to do every given month. And so we withhold some of the money just because like we withhold for taxes, for property taxes, for expected expenses. And if we don't end up using them, then we're going to be dispersing them to everyone. But to do it monthly, we're going to be like just using projections as to how much we need to withhold and then disperse all the net rent to everyone.
Yeah, that's great. That's solid payouts in terms of, especially with your first property, which is around 10%, right?
Yeah, so it's 10% over a 3 to 5 year holding period. So real estate's one of those asset classes where the longer you hold typically, the better your return is. Of course, there's a sweet spot, and that sweet spot's about 3 to 5 years.
Okay. And wait, from the get-go upon acquiring the home, it's already rented out. Is that it?
Yeah, so this first home already had its tenant in it. We negotiated with him to raise the rents just because, to put it at market standard, even below market. And
Okay.
Yeah, we have a tenant already in place.
Nice. Yeah, I'm just curious about that. And yeah, I guess next question I have is with regards to that. And if you don't mind me moving a bit off topic, but going back to a bit earlier where, yeah, you guys are built on Solana. Why do you guys choose Solana? And are you guys considering any other chains moving forward?
Yeah. So for us, we started building this company about a year ago. And I think about a year ago, we saw the other side's land launch on Ethereum, and we saw just how expensive gas fees got. I think at one point, gas fees hit around like $3,000 per transaction.
Oh,
Which,
yeah.
yeah,
I was there. It was crazy.
yeah,
to
exactly.
just
No,
move an NFT, man.
I no, exactly. You know how to. So when we saw that, we were like, we love the decentralization of Ethereum and all the communities that have built on top of it. But for us, we're all about lowering the barrier of entry into real estate, where, you know, the whole typical home price in the US is 430,000. We couldn't have people paying like even $10 in gas fees for this experience, especially if they're only going to invest $100. And so for us, then it came to, okay, do we use Polygon? Do we use some other L2s? Or should we use Solana or some other L1s? And Solana really spoke to us just because the first reason I had friends already that were building on Solana and could speak really highly to it for me. The second was just the speed of transactions and just like the TPS they've had. Like they have so many transactions happening per second. So in this future vision of which real estate is completely online, trading between people, where you can even stake your tokens as collateral to take on debt, like you need a platform that can handle a lot of this throughput. And to us, we see Solana as a way of doing that. So that was really a big piece around Solana. But on top of that was also just a lot of the communities that have been built there. There's a lot of NFT projects that we've spoken with some of their leaders and chatted with them. And it's my thought that like users bring developers that want to build for these users, who then bring on more developers, which then brings on more users. It's really just a cycle. And so, yeah, that was the decision around Solana. Of course, will likely allow for, like, we have a lot of off-chain data as well. So for example, if Solana was gone tomorrow, we would still have a lot of our data for a lot of our users that we could then switch to another chain. That's not completely off the table. At the end of the day, we're always looking out for our users, regardless of what chain. And so that's how we approach some of our data storage.
Yeah, that makes sense. And yeah, in Singapore as well, there's a lot of people. And there's actually a very strong Solana community here. And a huge plus point of Solana is I guess just simply by having lower transaction costs in the literal sense, makes it a lot more better for user UI and UX. Because yeah, like to your point, we experience this as well because we're built on Ethereum. And the transaction cost can really add up. And sometimes, yeah, it's quite hefty and it's comparable to even the interest income which people get on the loan pools we deliver. So it's something we're thinking about as well. So yeah, that's good to know if regards to how you guys lender on Solana instead. And yeah, another question I have is with regards to, I guess, the NFTs. So upon receiving it, how liquid are these NFTs? Because you said the holding period is 3 to 5 years. But are these NFTs like, how do I put, can I sell them as and when? Is there NFT to USDC kind of liquidity pool available for individuals to sell their home NFTs as and when they wish?
Yeah, it's a great question. So for this first home, and for every home we tokenize under like the current regulatory framework we chose, you have to hold the token for at least a year. Any Reg D security offering, you have to hold for at least a year. But after that year, you can absolutely sell it. These are all securities. So like OpenSea, Magic Eden, like any sort of marketplace is not going to want to sell these. So we as Homebase actually will buy them back from users at fair market value. And so we'll be updating fair market value using third-party pricing providers so that we're not the ones saying, this is how much it should be worth. This is third-party data saying how much it should be worth. And we'll buy it at that price. And then we'll sell it back to users. So that's really just an interim solution. We are going to be we're going to be raising around in the given months. And once we do that and close that, we're going to be applying for an ATS or an alternative trading system license. And so that would allow us to trade securities peer to peer. And so that's the true liquidity that people can pull in. And we're even in conversations right now. I can't name drop any names right now, but with some lending providers where you can actually collateralize your home tokens and take on liquidity and immediately take on debt, all on chain. And that's something we can do in the short term. But the peer-to-peer trading is a long-term solution. And until we get to that, Homebase will buy it for market value.
Okay, great. Yeah, sorry. I was just typing it down. But okay. Yeah, I guess my question would be, you said is, let's say you guys repurchasing the home at third-party valuations. Are these third-party valuations like, how do I put, do you guys put those data on chain through maybe like Chainlink oracles, or I'm not sure how do I verify these third-party providers and their valuations?
Yeah. So one company we're going to be talking with soon is called Blockchain Home Registry. It's not the same as Chainlink Oracle providers. I know you're referring to where they updated like even by second the prices of some of these properties, but because they're so specific, at least right now we're thinking of like getting traditional property appraisers and trying to get to a value with some of these companies that have had a lot of previous data. For example, Blockchain Home Registry is a company that is all about putting real estate data onto the blockchain, and they partner with 6 different appraisal companies that each give like a value as to how much the home should be worth. And these are companies that have been doing this for like tens of 20s of years. They've been in the real estate space, at least in the US, for a really long time. And so that's how we will be, I think, setting the price of the home. Of course, if we get a lot of feedback from our users that maybe that doesn't feel fair, or maybe that doesn't feel correct, then we'll update that. We're very much a company that experiments with a lot of things. So even this very first home, it was a big experiment. Do people even want tokenized real estate? We've been hearing about it since 2017. It's never really taken off. Let's see if maybe is this something people even actually want. And so we were very surprisingly shocked that people did want this. Of course, we were building this, so we want it as well. But just to say, we'll change things up if people don't feel like those prices are fair. And eventually we'd love to have a lot more on-chain Oracle-based data that showcases what real-time prices move. But until we get there, we're very much like in this higher friction-based pricing, but with the end goal of all of this happening on-chain, the prices being updated in real time, and people being able to take on debt in real time and on-chain.
Yeah, that makes sense. Yeah, for a start, traditional property appraisers definitely would be a solution. But yeah, really interesting to hear that you guys are working with lending providers to make these home NFTs composable and potentially the ability to lend upon them so they can access liquidity a bit faster. Yeah, I was wondering if you guys, before I briefly mentioned, have you guys thought about creating, let's say, liquidity pools with USDC and the NFT so that people can swap in and out of it after the 1 year mark? So it can be a bit more liquid. I don't know how that plays into your ATS application for P2P trading, but just curious your thoughts on that bit.
Yeah, that's a great question. We haven't fully explored that option, to be quite honest with you. Our legal frameworks right now are pretty airtight with how they operate. And so we decided to be a bit more conservative on the legal piece, just because of how much uncertainty there is right now in the Web3 space. And so, for example, we can't even purchase the home and then immediately, we can't even purchase home tokens and then immediately sell it, because that could be seen as an order book. And then that is something we can't do because we don't have an ATS license. So basically we have to buy it, hold it a little bit, and then sell it. And so I think the liquidity pool opens up a question around, this is effectively an order book where maybe there's not people immediately buying and selling, but there's always a bid and ask price. So that's something I'd have to explore with our legal team more, how that would potentially work. But I appreciate you bringing it up. Definitely going to look further into it. For this very first property, it was all about just like how can we go to market as fast as we can and have all the right regulation in place. But definitely a great question and something we'll explore.
Yeah, definitely understand. Legal issues come first. But yeah, I'm glad that you guys are exploring that. And yeah, let's get into maybe towards the business development sides. So how do you guys go about choosing what home to purchase? And besides residential homes, which you guys are currently working on, will there ever be commercial homes? Yeah, sorry, commercial properties. Commercial homes. Yeah, but yeah.
There might be commercial homes. After COVID, I think San Francisco, 33% of commercial properties are vacant, which is insane.
Oh, wow. That's interesting. Yeah, that's a very interesting stat. Yeah, go ahead.
Yeah. There's a lot of commercial debt coming due in the next 2 years. So I think the commercial real estate space is going to be very interesting. But yeah, I think for us, we're definitely going to be focusing on residential real estate. To share with you our vision, we want Homebase to become like the platform that you can use instead of Craigslist, instead of Zillow. When you're a renter moving into a new city, you find an apartment on our platform, you move in, you buy 10, 20, 30% of the home, and now you're a fractional owner of the apartment you're living in. And so the future vision of Homebase is to first allow for real estate investing and fractional ownership to become mainstream and people get comfortable with the idea of that, but then really change the way people even think about homeownership. Because like it's our personal thesis that real estate will continue to get more affordable. And unless there's big government regulation that comes in and like puts a ton of supply of homes into the market, it's just going to further price out people. So how can we still make people feel like homeowners when they may not necessarily be able to afford it? And that's where fractional real estate comes into place. Or you like, even for this first property, Homebase bought a fractional amount of it, where we're planning on maybe after the year is over and we can actually trade some of these tokens, giving some of it to the tenant saying, hey, if you pay on time every month, you get $20 worth of equity in this home, but you could also buy equity in this home if you like. Like here's how much availability there is if you'd like to purchase a piece of it. That's really where like both sides of the marketplace come together. We're very much focusing on the investing side right now, but that's where the vision of where we're going is. And yeah, very much focused on residential.
Okay. Yeah, that's a great vision. I guess, tokenization. Oh yeah, and for people who, let's say, purchase a fractional piece of this house, just curious, would there ever be a chance where currently you guys are creating yield out of it through renting it out and also having the house, how do I put, appreciate over time, but would there ever be a chance where the houses are tokenized such that as with each piece of NFT, it represents a certain number of days or months which they can use the house as well? Yeah.
Yeah, it's a great question. We have no plans of that right now, but I think as we grow, like we're very open to experimenting around that. We really wanted to separate it out just between one side is just an investor that sees the return, sees the appreciation, gets rent. And on the other side, you have the tenant that just moves in, they buy 30% of it, they're a fractional owner now, they still pay rent, but their rent's reduced by whatever equity amount they hold. Very similar to a mortgage. People assume when they get a home with a mortgage, like the home's completely theirs, but sometimes forget that the second you stop paying your mortgage, the bank takes away your home from you. And like they charge higher interest rates on that. It takes a long time to get a down payment, especially if you have a bad credit score. And so fractional ownership can make it easier for people. But in terms of having the opportunity to live in the property, maybe if we ever do Airbnbs, like short-term rentals as part of our offerings in the platform, that could be something we experiment with down the line.
Yeah. Okay. That's great. Just curious about that bit. And yeah, other than that, like you guys mentioned, each house at the moment can only have 35 investors, which you guys have to establish a fairly close relationship with. How do you guys go about reaching out to these guys? Like, what's the outreach like? Is it through Twitter? Are those channels good, or is it through more formal channels like LinkedIn where you guys reach out to these investors?
Yeah. So it's funny. So we haven't formally reached out because we're not allowed to talk about any offerings that are live. So all we can really talk about is the platform legally, especially for non-accredited investors. So we're limited to 35 non-accredited, but we can have unlimited accredited. So it's all about like, we know the value that this provides is strongest felt by non-accredited investors, but there's definitely a lot of accredited investors that still feel like they can't own real estate and have found a lot of value in participating in this first home. But the main channels we reach them is Twitter's been a really big channel for us. We've had our account for over a year and just always post about real estate related content, memes about real estate, blockchain, Web3, tokenization. I think we maintain a playful brand, but still try to showcase that we're quite knowledgeable on the real estate side. We also have utilized LinkedIn, and then we've also used a good amount of word of mouth just from people we know that have been wanting to do this. So like a big piece of this too was two of our friends wanted to invest in real estate, didn't really have the best means of doing it. And they actually had the opportunity to do that through Homebase. And so I think 2 or 3 of the first investors in our first property or some people we knew personally that had been looking for a way of doing this and then just couldn't do it. And so Homebase gave them that opportunity to invest in it.
Okay, I understood. But yeah, towards the long term, where do you guys see your marketing efforts or BD efforts coming through for people who like to, like for the investors of the houses? Will you guys be putting more effort on, let's say, Twitter or LinkedIn or, yeah, well, I mean, I'm not in America, so I'm not sure what other channels you guys have available to push out for these products. And other than that, actually, fun fact, in Singapore, you can't even market on billboards or pay ad space to market anything crypto related. Yeah, just wondering how you guys go about doing that.
Wow. Yeah. I'm curious to hear how you guys go about doing it as well then. It seems like a ton of restrictions on the Singapore side.
Yeah, it is. I'll share how we go about it after you do.
Yeah, no, absolutely. Yeah, for us, I think moving forward, we'll likely try to keep off paid channels for as long as we can. We've been invited to come on in a few podcasts that specifically talk about like Web3, that talk about real estate. That's been great channels for us to get exposure. The Solana team's been amazing. And so they've given us a lot of resources when it comes to public relations. They helped us get this Blockworks article out that came out last week. They've just been like some amazing partners that have helped us a lot on the marketing side, just because they really believe in what we're doing as well. And so I think moving forward, we will likely continue to do like podcasts and blog tours. Then we're actually going to write a blog in the next few weeks. We're going to be partnering with Alex Stein from Chartlist, which is, I think, a great, amazing blog. Everyone should check it out. But getting like a few people from the Solana Foundation to also collaborate on this real world asset piece to showcase that we're thought leaders in the space. But a lot of it's just been organic so far. And partnering with like different NFT communities, letting them know, okay, like we're real people trying to solve this problem. And I've been just taken aback by how many like people in the NFT community that have been anonymous have reached out to us personally saying, oh my gosh, I'm a real estate investor in real life, but felt this problem. Super excited to invest in your next home. And a lot of this is done through Twitter, through Discord, and LinkedIn. Those are like going to be our primary channels moving forward.
Yeah, that's great to hear. And fun, that's very interesting that Solana Foundation is a part of your, they've been so helpful with regards to even the marketing side and getting the articles out. And yeah, I can't wait for the blogs to get more information on how Homebase DAO operates. And yeah, I guess to also briefly share on how we do marketing in Singapore because of the fair bit of restrictions. I guess there's a bit of gray area as to how we can market. So let's say if we host our own events, physical events, we can briefly talk about it, but frame it more like a educational session than a session where we push the product. Yeah, other than that, it's more or less also one-to-one calls, or currently what we're trying to do is reach out to DAOs and alpha communities to push for these products, but not in Singapore. Yeah, trying for overseas communities to see if they're interested in our case, on-chain corporate bonds. Yeah.
I see. Yeah. A lot of restrictions right now in crypto happening, especially as the SEC, at least in the US side, starts to crack down on it more as well.
Yeah, but I hope there's no crackdown on the marketing side. Yeah, I don't think the SEC is interested in that bit.
That's true.
Yeah. But yeah, other than that, do you guys have any efforts to onboard non-crypto users onto your platform? Because like I would think even in Singapore, real estate investment is a very TradFi kind of thing. Just a bit of background. I was at an event where they have another company called Citadel that does real estate tokenization in the Southeast Asia region. And for them, they marketed their product more towards TradFi investors people who already invested in real estate investment trusts, REIT. Yeah. So I'm wondering how you guys go about marketing it, or do you guys target these non-crypto users who are interested in real estate already?
Yeah. So we positioned our website as very much what's the value that we're providing customers. And that's the ability to invest in real estate with as little as $100. And like, if you go to our website right now, there's actually not that much that we're a Web3 based company until you get to the bottom of the site. And then you're like, oh, okay, like this is the technology they're using. This is how they're going about it. We're going to be working with Circle to see if we can get some custodial wallets in place where end users have full control over their wallets, but don't need to create one. We basically want to get rid of as much complexity as we can from the onboarding flow so that Web3 for people and the blockchain piece of it is really, oh, okay, like that's just the tech that they're using, but it really doesn't like prohibit or limit me when I'm onboarding and making an account. And so onboarding new people into Web3 is absolutely our main goal with this. I'm actually like really proud to share that we had about 38 investors invest in this first home, and we had to help about 15 of them in creating accounts. And there's a lot of onboarding calls with them, walking them through how to create a Solana wallet, how to put US dollar into Coinbase and transfer that. But it's very much a goal of ours to onboard new people into Web3 ecosystem. And it's even better if they don't even know it's happening. They're just in it, and it happens to be a Web3 blockchain-based product.
Yeah, that's great. That's great. And you guys, I realize you guys also have an email login process. So like, actually currently, is it already a custodied wallet, or do they still have to connect a MetaMask afterwards?
Yeah, so you connect to MetaMask afterwards. Effectively, we have going back to how we store data. So we have on-chain data and we have off-chain data. Some of them are duplicates. And the reason is like, if for whatever reason a chain goes down or it would be gone tomorrow, like we can't just have all our user data be gone. And so we need to know who owns what. And so if you just log in with your Gmail, we know exactly, because we KYC'd you, we know who your Gmail is tied to your identity. And we know that you as a person have, let's say 35 NFTs, which represents like fractional amount of ownership in this home. And so we can automatically show you your personal dashboard with how much like equity you have in the home. And so, yeah, you can sign up with an email or you can connect with your wallet. It's really up to you as a user.
Yeah, that's great. Yeah. Yeah. Interesting to see whether custody wallets would be a simpler process because you guys are already helping them on a one-to-one basis to get these wallets. And yeah, maybe have you guys also considered Magic? I understand Solana, a few protocols use Magic where, not literal Magic, but the ones where you're able to create wallets through email signups. Yeah.
Yeah. Haven't used that yet. I actually hadn't heard of Magic. Thank you for bringing it up. I'll take a look.
Yeah. Where I first saw it was Drift Protocol, which is a DEX on Solana. I mean, it makes the onboarding process a lot simpler, which is interesting for us as well, because we're also doing a similar process as you guys, where it's a bit more manual to onboard the investors or loan pools that we have. So if
Yeah,
we can simplify it even further, such that they don't have to go through the hassle of creating a wallet, then it's all, we're all for it.
that's awesome.
Yeah, but I guess the next question is, I see that there are 2 more houses going to be listed soon. So when will those launch? And what are the plans for the rest of the year for you?
Yeah. So the 2 homes we have are really just an experiment to see what type of properties do people even want as their next home. And so those are very much just model houses to see there's the feature of liking it, indicating interest. And so that's been a really great signal for us to understand like what type of properties people want to see next. And so now we're in the process of starting to source our next property. And so right now at Homebase, we're all about doing things that don't scale, just to understand more of what people want and getting great user feedback from investors that are signing up, but also homeowners that we're chatting with as we're giving them the opportunity to sell a fractional amount of their house or the entirety of it on the platform. So we're literally just calling homeowners that are doing direct listings and offering them the opportunity to sell on Homebase. And so for us, like, what are the true value props of tokenization is that you don't need to sell the entirety of the home. And that's something that didn't exist really in a liquid form until like Web3 and tokenization. And so for us, telling homeowners, instead of refinancing at a 5-6% interest rate, instead of taking a home equity loan at a similar interest rate or selling the entirety of the house, what if you just sell a fractional amount of it? You still get a keep. Homebase DAO is the manager. We collect and distribute rents. That's really the value prop that we're trying to provide sellers of properties. And we're hoping to have another home out in the next 2 to 3 months, I think is our time frame. We're just like closing out everything on the legality side, our current house, getting things ready for the next one, but giving us enough of a buffer time to really reflect on what worked well, what didn't work well with this first home, and make sure to iterate for the next one.
Okay. Yeah, that's great. I can't wait to see that in 1 to 2 months. And actually, with what you have said so far, it really gives me a lot of, like, it really sounds like what we are doing as well. For us, we already launched 2 loan pools for the corporate bonds where we lend to SMEs through a fintech platform. But like same thing as for you guys, what you mentioned, we do a fair bit of AAR, after action review, to take a look at what went right, what went wrong, and to see how else we can better suit investors, or what are they interested in, higher yield, or what kind of loan pools are they interested to look into.
Yeah, I love that. Great way to run a company and make sure you're taking feedback and iterating on it.
Doing things that don't scale. Actually, what I realized also is a lot of these Web3 companies don't really do that. They just launch. Maybe because I'm more into the DeFi side, but a lot of them just launch things which play around with GMX and GLP, and liquidity just fails anyways. So I don't really see a lot of user interviews or user research being done on their part. But glad to see it coming from Homebase DAO.
Yeah, no, I appreciate it. I'm with you. There's definitely some people that have a ton of features, and it's like you inundate users with too many features, and then you don't really focus enough on the core product. So happy to hear everyone at Bluejay is doing that as well.
Yeah. And also, I guess for the rest of the audience, if you guys have any questions, you guys can pop it at the bottom right-hand corner. I like how Kick Nio, sorry if I butchered your name, asked with regards to whether you guys provide custodian wallets for investors. That's something we addressed, and Alex Kim also addressed it. And if you guys have any more questions, just send them along. Because I guess I'm also more or less done with my piece here. But where do you guys see, just to wrap it up, Domingo, where do you see real estate tokenization moving forward? Would that be, because currently I believe Homebase DAO isn't the only one out there tokenizing real estate. But how do you see this whole sector playing out in crypto over the next maybe 3 to 5 years? It's a bit of, 3 to 5 years, a lot can change, but just a brief look into the future. Yeah, how you see it.
Yeah. So in terms of tokenized real estate in particular, I think looking back, like even 5 years ago now, 6 years ago, we've been hearing about tokenized real estate since 2017. It hasn't moved that much, but I think it was due to a few reasons. I think the first was we've been in like a perpetual bull market and such that real estate was just so hot and prices were going up so much that there really wasn't that much need to tokenize them. There was already enough demand on the just people normally buying them. And so there wasn't really ever a great time for a tokenization company to come into place and actually acquire enough homes at good value to provide to end users. And that's not the case now. Prices are starting to go down, interest rates are high. We actually have the opportunity to get good deals and then showcase them on our platform for our end users. And I thought something that maybe existed like 1 or 2 years ago when the market was insanely hot. I think the second piece is there's not really a standard right now with how to bring real world assets on chain. There's a lot of different players that are trying to create that standard, but are doing it in many different capacities. So people like want to create one standard for all real world assets on chain, not just real estate, but everything. And then you have companies that are really focusing on certain verticals. And so I think for us, like, we very much want to be our own first customer of creating a standard around real world assets. And we built some wrappers on top of the Metaplex protocol to first even tokenize his first home and follow security token offerings. But like we just created ourselves because there wasn't much background or history on that on the Solana blockchain, at least. And so we had to create that all in house. But I think moving forward, as we bring more and more homes onto the blockchain, we want to make sure that we're following a standard protocol that is useful for third parties to also, bring in their personal data, utilize our standard for on-chain debt, effectively making it where real estate slowly gets more and more liquid on the blockchain and makes it easier to trade and buy and sell. So where I see real estate tokenization going in the next 3 to 5 years, I think an article just came out from Citi saying that tokenization by 2030 is going to be like a $3 trillion market. I think more and more people are going to come into the space, try to tokenize different assets because they see the value and the liquidity that it brings, and the tradability that it brings, and the traceability. So I think we're going to see a lot of companies come into place tokenizing in different capacities. And I think that's great. It's going to bring up the entire ecosystem. So yeah, I think tokenization is here to stay. And it's just going to happen more and more as time goes on.
Yeah, that's great to hear. Yeah, I can't wait for that future where I guess all of us can own the power of a home just through a few clicks. And yeah, I guess Kik Nayo, sorry if I butcher your name again, he has another question. I'll read it out for you if you don't mind. He said, I heard that owners can tokenize part of a property. How does that work? And let's say if I tokenize 20% of my property, should I pay them interest to token owners? This is something like getting instant debt from an investor.
Yeah, that's a good question. So when we tokenize a home, we tokenize the entirety of it. And so what ends up happening, like for this very first home, the owner sold 20% of it, but kept 80%. And so we tokenize the entirety of the house. The owner's just keeping 80% of the non-fungible tokens. And then the other 20% was sold to other people that wanted to invest in the home. And so like that to me was an amazing use case of tokenization. They didn't sell the entirety of it. They just sold a percent of it. Got to keep the majority. It's still rental property for them. They're getting now 80% of the income and the other 20% is being distributed to everyone else that invested.
Okay, understood. Oh, honestly, I think you guys really found your next investor. This guy seems really interested. Why do you guys decide to go with NFTs and not just ERC20 tokens? And do you guys plan to give investors opportunity to trade tokens, maybe even with custom security decks? Yeah, it's a very good question. That's something which Ondo Finance does with the other protocol called Flux Finance, where they have whitelisted addresses and they are able to have them interact with one another in a DeFi manner. But yeah, go ahead and answer.
Yeah, no, that's a great question. So I think NFT, we could easily use like regular tokens for this. I think we're starting to see NFTs already become regular tokens. like blur trading basically makes it where there's a floor in every single NFT collection and it trades just like a normal token. Solana just released compressed NFTs. You can now release, you can mint millions of NFTs for the price for like $100, and you can mint like a million of them, which is just like crazy. If you think about, for anyone who's ever released an NFT collection, even for this first collection for this house that we created, we probably spent like close to $500 to $700 in mint fees and distributing them out. Like NFTs cost a lot more than regular just tokens. But the reason we chose that is just because we really like the JPEG aspect of NFTs, and you can also change the data that's showcased on the NFT itself. And so we want home ownership to feel personal for people. When they invest in properties on our platform, we want it to feel personal. And so each of our NFTs like has a whole, like a photo representing the house that we tried getting it as close as possible. So people do really feel like an owner of this physical asset. And that's going to be showcased in our rent. We'd also like a feature in which we can click into the NFT and you can see information about the house. And then that changes over time as the property gets older, as things get replaced. That was really the idea behind it. In terms of it trading on a DEX, so, yeah, but I think that's the goal. Like we would love for there to be a custom security DEX that allows for people to be trading these assets between themselves. And so it's really just about understanding what's the right regulation that we need to follow to make sure that people can do that and not feel like they're getting personally liable by making some of those trades, and making sure users feel comfortable to do that. So yeah, definitely great question. Something we're going to be exploring in the future, because I think that's really where the power of Web3 comes into effect for real estate.
Yeah, thanks for the amazing questions, man. And yeah, I see a senior software engineer at Consensus. That's really cool. Let me give you a follow. Yeah, but you are. Wait. Holy, that's quite cool. Building POC to tokenize properties in Georgia. Yeah, maybe you guys should really speak to him. He's really interested. Okay. One more question from you live, and the rest will be held through just Twitter, just tweets. But yeah, he says now, I see tokens more like ERC-115 that could be interesting for you. Semi-fungible tokens with metadata and amount of different type of tokens can be managed with just one contract. Okay, that's not really a question. Yeah. Yeah. That's thanks for all the questions, man. Okay, Nayo. But yeah, I guess we can wrap it up here. You guys got Domingo, do you have any closing words for the Twitter Spaces?
Yeah, no, just thank you so much for having me. I think this was like an awesome conversation. Appreciate you helping us like bring to light a lot of the legality around this, the technical pieces about this, where we're going in the future, and helping bring exposure to this. I think real estate has been very slow to move. And I think like we have such amazing technology, and real estate still transacts as if we're in early 2000s. So like I'm very hopeful for a future in which real estate's a lot more liquid. It's a lot easier for people to become homeowners, and you're bringing bonds on chain and helping provide some of that debt and facilitating that. So I think that's going to become really powerful as we start getting more and more real world assets on chain and start working with different contracts that allow you to pull some of that liquidity for some of these real world assets. Thank you so much for hosting us and being a very valuable member in the Web3 space as well.
Yeah, and we can't wait for, I guess, any of your next few updates. We'll help you guys retweet it and push it along as well. Maybe run threads like we did with your recent home sales. But yeah, can't wait to see what you guys do with regards to tokenization of real estate and making it more mainstream. And yeah, we'll also keep you updated with our upcoming loan pools. Actually, tomorrow we have a community call where we'll cover a bit on what's our next loan pool. Yeah. But yeah, thanks for having you. Thanks for joining us on your Twitter Spaces and giving me the opportunity to get to know you better as well and get to know Homebase. Yeah, and understand how Homebase works. And yeah, with that, I guess good morning, good afternoon, and good night to everyone. And thanks again, Domingo, for your time.
Of course. Thank you so much for having me. Great Thank you everyone who's tuned in and listened, and excited to have such a amazing community to keep building for the future as well. So thanks.
Yeah. Take care. Okay. Bye bye.
All right. Thanks. Bye.